Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Today we'll continue to create our portfolio of the possible trading setups and the commodity currencies because, as we said on Friday, we think that with the growing of the geopolitical tensions in the Middle East, the commodities and the commodity currency in particular could become the real driving assets in the nearest future. At least they could provide very significant and clear setups that could let us to trade it relatively safe and with a great chance of certainty, the great degree of the certainty. At the same time, as you know, when the geopolitical tension rises, the situation changes very fast, and that also impacts the market. The market participants becomes nervous. The market starts to drive faster, and that leads to appearing of the multiple setups on the different currencies. Well, guys, I would suggest you read our weekly research today because there we have pointed on some other fundamental points in relation with the current geopolitical situation, in relation with the commodity currencies. On Friday, we have talked on the New Zealand dollar that could create very significant setup in the nearest future. Today, this time has come for a Canadian dollar, especially because in Canadian we were trading long-term bullish setup for a considerable period of time. For some months we trade this upward action. The last month market has hit the targets, you can see on this monthly chart. Today we will start from the monthly chart because currently, guys, on the intraday charts we don't have really setups, and they probably will appear on next week. That's why today we'll start from the monthly chart. So you can see on the monthly chart we have the completion of the very significant pattern. So we have this huge ABCD pattern, and market has hit the 100% extension of this target. So ABCD has been completed. Also, market has done this right at the major 618 resistance, 134.68. From the technical point of view, guys, it doesn't matter what fundamental factors could stand behind of the Canadian dollar. Maybe they are extremely bearish for a Canadian. But anyway, even if this is true, and theoretically, if we suggest that the real price of the Canadian dollar should be somewhere around 160, but despite on this moment, from the technical point of view, market should show even at least the minor respect and response on the hitting this strong target, significant target and resistance. Despite what the fundamental factors stand in the behind of any asset, market usually, in the most cases, responds at least with a minor retracement to the completion on major destinations, major levels. That's just how market works. Although, guys, at the same time, it's very difficult to suggest why market could continue move to the next target. It probably could happen only if the crude oil will drop to the $16 per barrel, and if the Canada will have domestic problems or something of that sort. Anyway, it doesn't matter for us. For us, this major point is what to expect here. So right now we see market has hit this resistance. This is not just the ABCD target, but this guy's also an agreement resistance. So you can see market already has started to show reaction on this area. From the technical point of view, the minor support area currently would not have any ABCDs down or some patterns that could definitely point as the possible target of this retracement. But from the dealing with the ABCD patterns, the minimum retracement will be a 3/8 support of the CD leg, and that stands at 119. So as you can see, the 10 points is really not small move, and that will be just a minor respect on this ABCD pattern. If market will start to show the deeper respect, and currently with the geopolitical situation, especially with crude oil prices, it's very difficult to say that it's absolutely impossible. consider the distance could be even greater. You can see that this level stands not below the oversold, so it's reachable for the market, could be reached. And this in general coincides with these former lows. That will be probably the destination of this possible retracement on the monthly chart. And that will be the foundation of our further analysis here. Wash and rinse here, guys, hardly possible because market already has hit the target. So if the target, for example, has not been hit yet and market starts to move down, in this case we could say yes, probably the market could show the wash and rinse and touch the target, grab stops, and then turn to the downside. But already that has been done. So you can see market already has hit the target and starts to move down. That's been said, on the Canadian dollar, we will wait for a downward continuation on the monthly chart on the big picture, with the first destination point somewhere around 119 area. That's our long-term expectation on the Canadian dollar right now. When we drop into the weekly chart, we see that this fast action that has started right now has led market to the weekly oversold, and also market has moved below the monthly pivot support one. This moment tells us that current action down is not just a retracement within the long-term bull trend, but this is probably the starting of the bear trend, because you can see that pivot support one wasn't able to hold the move down. That's the bearish sign. Right now we see the very interesting combination. That's very good for us. Take a look at market almost has reached the 129, 128.70 fib support, and this is also previous top. This will be not bad support area. Taking into consideration that this will be also weekly oversold, this will give us a lot of opportunities for trading. First of all, we will get the bullish stretch pattern on the weekly chart. That will suggest the upper bounce here, retracement. So the combination of the fib level with the oversold creates the stretch pattern. Finally, we could get here some kind of the double repo buy, because we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 bars to the upside. That was the first close below the 3x3. I don't have it on the chart, but if you will draw the 3x3, it tells you that you also could get the bread and butter. And from that standpoint, also upward action is possible. Also, guys, it's interesting that market has finalized. You can see this upward action on the monthly chart by this butterfly. So butterfly has triggered the reversal, and the final action on this monthly BCD has taken the shape of the butterfly. That's very, very cool agreement with the weekly and monthly charts. So that's been said, market, although we have the bearish setup on the monthly chart, at the same time on the weekly market stands at the support and at the oversold. It means that in the short-term perspective from the next week, we probably should be watching for possible bounce. And that bounce is a great advantage for us, because by using this bounce, trying to sell this rally, we will be able to possess ourselves on the monthly chart with the long-term bearish target. That's why we need this upward retracement. At the same time, the traders who trade on the short-term perspective could try to trade directly these patterns. I mean the stretch pattern, I mean the bread and butter. So we can try to take the long position with the attempt to ride on the possible upward bounce here. On the daily chart, guys, we do not have any clear patterns yet, but in general, this picture suggests the same conclusion. So you can see market also creeps with the oversold down. This area that we have specified on the weekly chart also will be the weekly pivot support one, and it will be logical if market will hit it and start move up. So that's been said. On the first stage of our trading plan, we wait when the market will hit this support area. Second stage will be upward bounce. How deep this bounce could be? Well, taking into consideration the previous upward actions momentum, taking into consideration the market is oversold, I suggest that retracement will be probably 50% or even 618. So this will be relatively deep retracement. And from that standpoint, I think that we should keep an eye on the monthly pivot weekly pivot resistance one. That will be also the test, the checkpoint, because if market will fail to pass through the weekly pivot resistance one, it will tell us that market is really bearish, because we know that the pivot resistances hold upward retracement with the bear trend. So if pivot resistance will hold this retracement, market turn bearish again, turn down again, that will be the additional confirmation of the bearishness of the market. That's been said, we probably will be watching for that area. Well, on the 4-hour time frame chart, guys, I will show you the picture, but nothing really special there. So we have this channel down, lower border approximately coincides with the same 128.50, 128 area where we're waiting for a appearing of the support, but you can see nothing special, really special here. So maybe, but definitely, guys, on the 4-hour time frame chart, on the hourly chart, some reversal pattern will be formed before the upward action will start to the maybe to the weekly pivot resistance, maybe even higher. So anyway, any retracement that will start here based on the weekly stretch, based on the possible weekly double bread and butter buy, probably will take some shape on the intraday charts. Maybe this will be reverse head and shoulders. Maybe market will form the butterfly or something of that sort. But some pattern probably will be formed that will trigger this upward action. So that being said, as you can see on the Canadian dollar, we have very interesting and attractive situation. Multiple setups as on the long side of the market in the short term, as the bearish setups on the monthly chart. So we could step by step trade these setups on the Canadian. And it's what is more even significant here that we have the clear direction for a considerable period. So 119 area until market will hit it, we probably will have the clear bearish direction, and we could try to follow you with any pullbacks and sell the rallies in the direction to the 119. That's really big advantage. So let's keep watching what we will get on the next week.